Hello and welcome back to the Active Spirit Live Edition, a video series from Active Chartered Financial Planners where we talk about some hot topics, emerging trends and offer guidance in the world of finance. It's been a busy few months in the financial sector with big events at the end of last week, and we'll be talking about this in this edition. Joining me are Reshma Begum from the Federation of Small Business and Fraser Wilkinson from Quilter Cheviot Investment Management. Together we're going to chat about the government's fiscal event, which took place on Friday, and the aftermath, which has been making the headlines this weekend. So Reshma, I'm going to come to you first. As part of the Federation of Small Business, you obviously look after lots of businesses in our area. What do you think this means for businesses in the Tees Valley and the North East?
I think it's fair to say that it was a good start. There is a lot more to do, and I think that would be the case anywhere. As much as the North East and the Tees Valley, business sentiment will be the same. There is a lot of positive news that came out of Friday's announcements, and you know we are happy to see that the national insurance contributions hike, for example, has been reversed. That will help a lot of small businesses, as has the intentions around corporation tax increases. So, you know, there are positives. I am aware that those positives have unfortunately been muddied by some negatives, for example, the interest rate increase. But there's a long way to go, and the road to recovery is never easy, but it's a good start.
Yeah, I think I've got some stats here. The national insurance rise are meant to save each business around £10,000. So they say. Obviously, the corporation tax is certainly welcome from everybody I've spoken to as well in terms of the amounts that they'll save. What's your view on the investment zones then? Because obviously Teesside has been announced as having one, which is brilliant. You know, let's be honest. It is a positive. I'm all for anything that brings positivity and investment to an area. My biggest fear, if I'm honest, is that we get some form of displacement of jobs and businesses from one region to another. But what's your understanding and thoughts on the investment zones?
I think the investment zones in theory are a really, really positive move, and they have the potential to offer some great economic prospects to the regions in which they are placed. As you mentioned, the Tees Valley is one. We do have some that cover almost all of the North East 7 area as well. So in theory, the whole of the northeast of England region is covered. I think if they do what they aim to do and they achieve their objectives, then they could be really positive. As you've alluded to, it has the potential to create some disparity, I guess, between regions and between those who have an investment zone and those who don't. But I think actually that does also support the levelling up agenda in that it gives equitable distribution and opportunity to those areas that need it most. If we're honest, some areas are further along their levelling up journey than others, and the northeast is really needing this boost and needing that support.
Thanks, Reshma. I'll bring you in now, Fraser. A conversation that many people have had over the weekend is the moral dilemma around the tax cuts and the abolition of this 45% rate for higher earners. There are some economic reasons behind that, and again, we've spoken previously before. What do you think the main thinking behind that is in terms of, is it likely to raise more money for the Treasury?
Yeah, well, you're sort of asking me to defend the indefensible, but just in theory, the cost is about £2 billion a year, the 45% tax cut. The total cost of the tax reduction is about 45 billion, and it's 2 billion of that is the 45% tax rate. The idea is to try and undercut other countries like in Europe to get high-paid jobs into, particularly in the City of London, and to reduce tax avoidance for people with complicated schemes to try and reduce their tax. If everyone pays the 40% tax, in theory, we should get more tax overall. That has certainly happened in the past when they've cut from the 50% to the 45%. But there's no guarantees it will in future. And optically, it looks terrible in a cost of living crisis.
Yeah, again, the debate that I've had many times over the weekend and this morning is that it's that moral compass, isn't it? Around, is now morally the right time to be seen to do that? Although the economic science does tend to prove that it does generate more pounds in the coffers, which, ultimately I presume that's what they're trying to do.
Yeah, it's a very long-term plan, and it doesn't feel like they've got enough time to see it through to fruition. So These tax cuts won't take place until April 23. We won't really know if they've worked till April 24, and there's probably going to be an election in May 24. So it's going to take a lot of time. I think it's a shift in emphasis, and I think the markets are telling us that they're a bit surprised by the shift in emphasis. It's trying to grow jobs, it's trying to grow investment into the UK, but at the cost of increased borrowing, and it's certainly making markets uncomfortable in the short term.
Thanks, Fraser. You've hit a really valid point there, which I'll come back to yourself on, Reshma, is that investment in the UK. Strangely, on Thursday night, when the Bank of England increased their rates last week, I had a few messages from people who run businesses, and they said that the interest rate hike was actually going to prevent them from investing further. Are you seeing that amongst your members in the FSB?
I think the problem with the hikes obviously is that it leaves already cash-strapped businesses even more cash-strapped. And I think we know from experience that businesses, when they do have any sort of extra, especially smaller businesses, when they do have extra money in the bank at the end of the year, that money is reinvested into their business or into their people or into innovating new products, new services, etc. Very rarely does it end up as dividends in anybody's back pocket. So yes, for that reason, it absolutely will create a lag in the investment opportunities that businesses can offer.
Yeah, and ultimately that's not what we want, is it? I think the whole premise of the statement on Friday was to hopefully get people spending more. It is a give with one hand and take with the other, isn't it? That's how I summarised it on Friday, which never feels too good. I'll come to you, Fraser, next, and again, lots of talk over the last couple of days about the pound, strength of the pound, how markets react. You're more on the coalface than many of us. Give us a little explanation as to why the pound has fallen so much, the impact it's had on markets, and then how you might think that might rebound in some way.
Well, I think it's first to go back to the core of what's happened in the last year, which is that we've had a change in emphasis of interest rates rising around the world, led by America. In the United States, they've raised interest rates faster and higher than they have in some other parts of the world, including the UK. It makes it more attractive to park your money in America. So the dollar is extremely strong around the world. If you just look in the last year, the euro is down 17.1% versus the dollar. Sterling is down 20.4%, so a bit more. And the yen is down 23.3%. So this is a global phenomenon of the dollar being very strong and also seen as a bit of a safe haven in turbulent times. The risks are for Britain has the sterling gone down a little bit further than the euro because investors are worried about unfunded tax cuts, and will that mean the national debt goes up a bit too high to be able to service?
Yeah, and obviously this morning there's been a bit of hype, let's say, within the media, and you've got people who know nothing about financial markets commenting on it, and I always think that's a worry when you've got people talking about this sort of thing that have got no experience in talking about it. But unfortunately, that's what makes the news, isn't it? And then obviously that creates a little bit of a hysteria. I know, again, when we've spoken in the past, it's not as bad as it may seem, though, is it?
No, I mean, fundamentally, the way that Britain earns its living is selling goods and services around the world, and we need to do more of that. So it is now, sadly, cheaper to hire a British worker, and as a result, that will help on jobs. The only problem is, as an island, we import a lot of the raw materials that we use to make things, and also to give us our quality of life. So costs are going to go up further. Inflation was set to peak around 11%, according to the estimates, maybe in a few months or early next year. That is probably going to go up further with this fall in sterling. So it means we're more attractive. It means better help long-term on the job front, but it means right now costs will start to go up quite a bit more. Yeah,
and like I say, it's... We've got some tough times ahead, haven't we? And Reshma, finally back to you. Overall, do you think the announcements have gone too far? Are they what we needed? Is the stimulus exactly what businesses were crying out for, or are we still in for some choppy waters ahead?
I think that's a difficult one to answer, really, because it's not quite as black and white, I guess, as we've alluded to in discussions. In the short term, some of the decisions may look a little questionable, but I guess at the end of the day, as experts or as politicians or as elected leaders, they have to make decisions that are sometimes difficult and often unpopular. In the short term, some of the announcements that were made, particularly around the corporation tax and the NICS hikes, as I mentioned, and the and IR35 as well, that was really welcome. There's a number of really welcome announcements, but there is a long way to go. The recovery it's far from over, really, and there's much more that needs to be done.
Well, it's certainly a turbulent time for the financial sector, and in both businesses and personal spheres, you may want to seek some guidance. Your professional advisors, like your accountant or financial advisor, can offer further advice and support. Thank you for joining us on this edition of the Active Spirit Live Edition, and thanks to my guests, Reshma Begum and Fraser Wilkinson. Please join us next time.